Are you thinking about switching your mortgage to a new lender at renewal? Or do you have a mortgage currently that starts with a 5% interest rate or higher? This video is for you because I'm going to go over how to switch your mortgage and cheat the system so you shave off years of your amortization and save thousands on interest, okay? A lot of people get this question wrong as well. Can I change lenders and switch my amortization? I'm going to break down so many things in this video in plain English, and a few of the questions that you might have, the answers might surprise you. If you're new here, my name is Alex. I work with clients all across Ontario on the mortgage side of things, and on the real estate side of things, I focus on the GTA, specifically Oakville, and helping people invest in multiplexes. If you want to have a chat with me, just click the link below in the description and book straight into my calendar. And please don't forget to hit the like and the subscribe button. Turn that little bell thing on so you don't miss any updates. Okay, let's do first things first. What is a switch? A switch is not a refinance, and it is not a brand new mortgage loan. A switch is basically transferring your mortgage from your existing lender to another lender with the same balance, remaining amortization, but with a brand new term and interest rate. Think of it like switching your cell phone provider, but keeping your same phone number. That's the easiest way to explain it. Same mortgage, new lender, hopefully a better deal. Now, here is the big question. If you have 20 years left on your amortization, do you have to keep the 20 years when you switch? And the answer, absolutely yes. It is true. You must keep the same remaining amortization. And why? Because legally, a switch is basically a like for a like transfer. It's like apples to apples. You are not allowed to change the structure of your mortgage, only the rate and the term, and maybe whatever prepayment privileges come along with the new lender. So if you try to change your amortization, even by 1 year, the lender is required to treat that as an entirely new thing, and that's a refinance. So why do lenders require this? Because financial institutions do this because a switch is supposed to be low risk. They're just basically assuming your mortgage, but under their name. You're not borrowing new money. You're not extending your repayment timeline. You're not restructuring the mortgage. The new lender is basically just inheriting your existing amortization schedule. And if they let you reset that schedule during the switch, that changes the whole risk profile of your mortgage. So they legally have to reclassify that as a refinance. Now, this is where I want to drop the bomb, because a legal hack to beat high payments without refinancing. Okay, this is how you cheat the system. I want to give you a little insider trick because this is 100% legal and it works pretty much with almost every lender in Canada. And honestly, it really, like I said, feels like you're cheating the system. Here's the setup. You're currently paying a higher rate at your mortgage provider. Let's say it's 5% or more. You switch lenders and you lock in something closer to the 4% range. Your new payment is lower, but let's say you're already used to paying that higher amount. Here is the hack. You keep paying the same amount you paid at 5%, but structure it strategically. And this is what I mean. So you switch lenders to the lower rate, you choose accelerated biweekly payments, and you take the savings between your old payment and your new payment, and you add that amount as a prepayment top-up once a month. And this is the best part about doing this. 100% of that extra prepayment goes towards your prepayment privileges. It goes directly to your principal. There's no refinancing needed. There's no resetting your amortization. And this is the closest thing to a mortgage cheat code in Canada. And most lenders will also let you increase your payments if you want to take lump sums on top-ups, which is what we just talked about, and use accelerated biweekly to add that extra full payment per year. And you combine all three of those things, that can chop years off of your mortgage without even touching the amortization rules. And you're simply paying for what you were already paying for because you're used to that payment. You're just cheating the system. Let me give you a real life example here, okay? You got a mortgage, there's 25 years left on the mortgage. You now have 20 years left. Your rate was 5.69 and you want to switch lenders at renewal because someone is offering you, let's say, 4%. Now, this is a great move. When you switch, the new lender must set your amortization to the 20 years that was remaining on your previous mortgage. You cannot extend it 25 or 30 years. You can, however, choose to shorten it, especially with the payment top-up trick I just shared. So let's say your old payment was, I don't know, $2,800 and your new payment on the switch is $2,400. So that's a $400 difference. And you dump that straight into your mortgage every month as a top up. The lender can't stop you. And every extra dollar destroys the principal and it just lowers it and lowers it. So here's a smart way to handle this. If you're switching to get a lower rate, stick with the remaining amortization. But if you do need lower payments, I understand that because Canada is super expensive right now and you do need to refinance, you can still cheat the system still by doing a refinance, resetting to 25 years, maybe combine some debt, pay off some debt, and then do what we just talked about, or refinance and choose accelerated biweekly, increase those payment options, especially if you're already comfortable with higher payments. Understanding the rule is key. So if this helped you break down the difference between switching and refinancing, please hit that like button, the subscribe button, and hit that little bell. And if you do want to book a call with me to see how we can restructure your payments and see if we can pay off some debt or just look at your scenario in general, click the link below in the description and you can book an appointment with me directly into my calendar and we'll meet on a Google Meet. Thank you so much for watching and I hope this helped you all understand how to cheat the system.